Good morning, my fellow traders. My name is Michalis, and I'm one of the markets analysts here at HF Markets. And I'd like to welcome everybody to another live trading session. Now, yesterday and this morning, we've seen a lot of volatility on the S&P 500. And I want to confirm why we've seen such a change and sudden change in the trend. Because, of course, we need to look at the price movement that we saw on Tuesday. The price movement that we saw on Tuesday, we saw a very nice upward price movement that you can see here, and it actually brought the price above the neutral level of on the RSI, and it took the price above the volume weighted average price as well. But then we saw a very quick and sudden change. So why did we see that change, and why is the price declining this morning? We have to take into consideration that on Tuesday, the reason for the price increasing in value was because of the US job opening. So basically, job vacancies in America significantly declined to a 3-year low. Because of that, shareholders and market participants started to predict that the Federal Reserve will become slightly more dovish. So they will cut interest rates by 25 basis points next week, and they will do the same in December. And that pushed the price significantly higher. But yesterday we saw actually very positive employment data, and we also had positive economic data as well. So because of that, it kind of cancelled that thought, and people repriced a more hawkish Federal Reserve compared to what we were looking at on Tuesday. And because of that, the price started to decline. And this morning it declined even further, very simply because Microsoft and Meta had some negative comments during their quarterly earnings reports within regards to the next quarter and increasing their expenses. So, of course, those significant stocks declined as well, and it took the price of the S&P 500 considerably lower, almost 2% lower. But what I want people to take into consideration is we recently have had a decline like this. For example, if we look at this price movement here, ladies and gentlemen, and we measure the price movement downwards, we can see the price movement is 1.60% lower. And if we look at the price movement that we've seen so far as well, it's almost identical. So we've seen that previously when the price declined, shareholders very simply took advantage of the discounted purchase price. So they took the lower price as an opportunity to enter at a better price at a better time. So we have to take into consideration that potentially this is something that can reoccur. It's not guaranteed, but we can take into consideration that support level, because you can see as we hit that support level, the psychology of traders quickly changed, and we saw quite a strong upward price movement. So, what can potentially prompt shareholders and buyers, and generally speaking, buy order demand? What can prompt these factors to actually increase demand? And there's a couple of things we can take into consideration, which is going to happen over the next 24 hours. Now, this afternoon, we will have three major economic releases. We will have the core PCE price index, we will have the employment cost index, and we also will have the weekly unemployment claims for the US. Now, if the core PCE price index is significantly lower, and also the employment cost index is lower, and the third announcement, which is the weekly unemployment claims, is higher, then it actually starts to put again the spotlight on the Federal Reserve to take into consideration more frequent interest rate cuts, whether it's going to be a larger cut next week or it's going to be more gradual, but of course more frequent. So, for example, 25 basis points next week and then 25 basis points again in December. If we are going to see those figures uh, release, the lower inflation figures, the lower employment cost index, and also higher weekly unemployment claims, that can be deemed as potentially positive for the S&P 500. And in addition to this, we have to take into consideration that traditionally, typically, November and January tend to be the best performing months for the S&P 500, very simply for tax purposes. So there is a reason for that. So we've declined. We're at a better purchase price. We're at a support level, almost at the support level, that is. And if we get these three positive announcements, then potentially we can take into consideration that it's a good area where we may have an opportunity to speculate upward price movement. So that's something you can take into consideration. The next thing I want people to look at is that we also will have two major earnings reports released after the market closes this evening. We'll have Apple release their earnings data and also Amazon. Both hold a very high weight. Basically, the S&P 500 is significantly exposed to these stocks. So if these earnings data are positive, again, it can really significantly support the S&P 500 away from that support level and potentially form a correction. So, what can people take into consideration? Of course, we have to note that everybody's got different methodologies and approaches. So, if individuals are looking at a slightly longer term approach, so for example, a swing trader, then a swing trader potentially may look at the price forming a full correction. Now, forming a full correction, depending on the momentum and the news which is going to be released today and tomorrow, it could take anywhere between 24 hours all the way out to 3 days. So this is why I say maybe that's something which is appropriate for swing traders or people willing to keep trades open for up to 3 days. Individuals looking to not keep the trade open for that long. So, for example, a session trader or day trader, they may look to to aim slightly lower than our trend line. So we've got the trend lines here, because keep in mind, whenever we cross away from the trend lines, a lot of the time it does correct back to that average price movement. For example, here we went above, it corrected back to this level. Here we went above again it corrected back to this level. Even when we saw a very similar decline, very quickly we went back to that average price movement. So this is the reason why we a lot of the time say that if you're looking for not an ultra short term trade, but a slightly short to medium term trade, then you can aim potentially just below those average price movements. But if we're looking at ultra short term, then of course we can switch over to a 5 minute time frame. And if we are looking at ultra short term, then what we can potentially do is if we look at the price movement from here all the way out to the 200 bar simple moving average, we're looking at 0.60% almost. Some people may not aim to trade all the way up to the 200 bar simple moving average. They may look at, for example, 50%. So that very simply is at this level here. So the target, ladies and gentlemen, for ultra short-term traders, somebody looking to keep the trade open for 1 to 2 hours, potentially maybe somewhere around there. But what do we need in order to get a stronger signal that the price is going to correct? Because for sure, at the moment, if we're entering a buy, we're entering the buy as the price is declining. So we're basically fighting the trend. And there's a risk to that because, of course, the news may not be in line with the S&P 500 increasing in value. We may get something completely different. So what can we potentially look for? And we have a couple of options, ladies and gentlemen. The first option that we can look at is for this moving average to cross above the other moving average. So the orange to cross above the blue. That way we have what is known as a bullish crossover. Now, we could enter at the crossover, or what we potentially may look to do instead is if we get a bullish crossover, we will wait until the RSI crosses above the 50, so above the neutral area, into an area which is basically indicating that buyers are starting to control the market. So, those are two options we can look at: the crossover, or to wait for the crossover and then wait for the RSI to cross above 50. At those points, then we can look at a potential opportunity to speculate a buy. Alternatively, ladies and gentlemen, we can look at the Fibonacci levels. So here I've entered the Fibonacci levels. And what traders may look to do is wait for the price to increase above the 50 level here or increase above the 0.65 level. So waiting for slightly stronger, higher momentum before taking into consideration speculating upward price movements. So that's it for today, ladies and gentlemen. That is the S&P 500. We've confirmed why the price is declining. We confirmed why yesterday we saw a very quick change in the trend. And we've also confirmed that, yes, we're at that support level. We've seen a decline like this before, and the price has increased very quickly thereafter. And we've confirmed what potentially is the requirements in order to prompt and trigger higher demand to push away from that support level again. So that's it for today. Of course, these sessions are here for educational purposes only. Hopefully, you found it educational and informative. In the meantime, though, enjoy the rest of your day. Trade safe, trade responsibly, and we'll see you in our next session. In the meantime, goodbye.